Good evening and welcome to Resource PNG. This evening we bring you a special on the monetary policy statement that was presented by the Governor of the Bank of Papua New Guinea, Mr. Loy Bakani. Here he is with the presentation.
If you look at the previous statements, we have slightly changed the format of the monetary policy statement. What's changed now is that we're trying to focus more on current issue that is confronting us in Papua New Guinea, and also to give more light, shed more light into that particular issue. Previously, you would have seen a lot of the format was very much looking backward, picking up all the developments and then going forward on that basis. But we've changed that to focus more on whatever issue we feel is very important for the economy and on a macro level. So let me start with the presentation. Basically, this is the objective as per the Central Banking Act. Basically saying the objective is of monetary policy, price stability, obviously, and it's important for the businesses, governments to have very stable price stability in Papua New Guinea, because it gives confidence in the exchange rate and the management of the economy, government for planning purposes, and obviously for private sector for long-term investment and development. And over time, if everybody is working in this kind of environment, then you can, it's conducive for long-term economic growth of the country. Just by order of presentation, I'll cover some international developments, going through it and how it fits through into the domestic economy. I'll give you some taste of the indicators, macro indicators, and then the theme that we have focused on in this statement is on liquidity and price stability, and obviously raise some issue on the macro level. Now, we would have all read and seen on televisions that the economy, the global economy continues to slowly recover, and that's in the second half of 2011. It's been, in terms of global economic growth, it's been revised downwards to 3.8% now from an earlier estimate of 4%. The slow recovery is continuing in both industrialized and emerging economies, although I think the emerging economies are a bit better state than the industrialized nations. In Asia, growth is also slowing, but remains relatively high compared to the rest of the world, and obviously driven, we know, China and other parts of Asia, Asian countries are included in that. Now, the major threat, as we all know, continues to be the European sovereign debt crisis and of course, the sustainability of U.S. fiscal deficit. Inflation in the global economy eased in the fourth quarter of 2011 as a result of weak demand and easing in oil and food prices. Although eased, but they're still relatively at high level. Monetary policy in most major industrial countries were kept unchanged in the second half of 2011. The exception was in Australia and in Europe, where the ECB and the Reserve Bank of Australia changed their policy rates to further stimulate economic growth in the economies. In the domestic economy, we continue, as Paul said, and also reflected in various reports by our donor partners, World Bank, ADB, and recently the IMF during the Article 4 mission. They confirmed that PNG economy continues to grow very strongly, and it is expected to grow even more or to continue in 2012 and the medium term. For 2011, the bank estimates that GDP growth will be higher than earlier projections of 9.5%, and Treasury's estimate in the 2012 budget of 8.9%. So obviously, it'll be around that magnitude, but a bit more for 2011. That growth is expected to continue in 2012, and the attribution to that would be is obviously the construction of the LNG project, which obviously reaches its peak in 2012. The commencement of production at the Ramu nickel and cobalt mine. Obviously, the high expenditures you expect during elections is another factor that will contribute to this growth, and on high international commodity price for our exports, and obviously our export earnings, and of course the underlying private sector ongoing activity is another factor, major factor that will contribute to this growth in the economy in 2012.
We'll take a break from here and be right back to continue with the BPNG Monetary Policy Statement presentation. Welcome back. We continue with Mr. Loy Bakani's presentation on the monetary policy, and in this he discusses the key macroeconomic indicators.
As a result of the activities over the last 2 years, both on the generated by the LNG construction, LNG project construction, and also private foreign direct investments, and a good export earnings for our exports, Papua New Guinea, we've accumulated a lot of reserves. Up to December last year, 4.3 billion US, or equivalent of 9.2 billion kina, which is more than sufficient to cover for our imports. That's about 11.5 months of import total, and 16.7 months of non-mineral import covers. So another historical record for level of reserves. As at 28th of March, this week, it's still 4.3 billion US, or 8.9 billion kina. Now I have a few slides just and I'll go through them quickly. The first one is on balance of payments. Now, this is obviously, balance of payments is a record of all our transactions between Papua New Guinea and the rest of the world in terms of transactions that we do with the rest of the world. If you can see, since 2009, when the LNG project was announced and commencement of construction started in 2010, and some of it obviously started in 2009, that's when you have the capital count, which is in brown color. That's been the forefront of reflecting all the foreign exchange inflows or foreign direct investment coming in to fund the activities in Papua New Guinea. 2012, we're expecting it to be, very high. Again, partly funding the LNG project and other related project that we have in Papua New Guinea also. Small, medium-sized mining and oil projects, mining. 2013, going to the medium term, 2013 is when the foreign direct investment is slowing down. This does not take into account the new LNG projects. It's only based on the PNG LNG project. 2014, when the scenario changes, when the export of LNG commences and the current account goes into a surplus. That's when we start to get the proceeds of our exports of LNG. So, just to reflect on 2012 and 11, especially 2012 and 13, although you have the current account, it's sort of like self-funding. So that's why you still have to, the net result is that you still have foreign exchange coming in, because the imports that are coming in are funded by the project themselves, or their own finances, not relying on any other borrowing or anything. So you still have net inflows of foreign exchange, which will result in a build-up of our reserves, and of course, on the way, it affects the exchange rate. Moving on to the fiscal, that's basically reflecting what the government expects to have from 2012 onwards as per the budget. A straight line there implying a very balanced budget for the next this year and next 2 years into 2014. We've seen what happened in 2010, where they have a surplus. Some of that surplus funds been put into trust accounts, and trust accounts been drawn down, and I will cover that, how it's affecting liquidity since then. This is what where it's showing up. Some of those surpluses are being deposited in trust accounts. The purple or red at the top displays the volume of government deposits that are currently held in the banking system, and the bottom is the gray is the what's being kept at the central bank. So you can see from 2009 there's been a sharp drawdown of those trust accounts, and that's obviously showing up with the within the commercial banks.
Stay tuned. After the break, we hear the governor of the Bank of Papua New Guinea discuss an important issue with regard to inflation in the country. Thank you for staying with us. We carry on with BPNG Monetary Policy Statement presentation.
Exchange rate. This is one of the issue that is very happening now, a positive one to some extent in terms of where inflation is coming in. In terms of March to March, March last year to March this year, the kina is appreciated by about almost 20% against the US dollar, and also it has also appreciated against the Aussie dollar and on a trade weighted index. So it's all positive in terms of the kina's appreciation, and that's reflective of the large foreign exchange inflows we're getting for the LNG project, high export earnings that our exporters are getting from because of high commodity prices, and obviously also private foreign direct investment coming in to fund local activities in Papua New Guinea. So as a result, your exchange rate is appreciating. We have been managing that quite closely, because we know the impact of that on our little export sector, and also to some extent other non-tradable sectors in Papua New Guinea, which would be can be expected to be hurt by the appreciation of the kina. We continue to talk to private sector, especially the exporters, to see and assess on an ongoing basis how the appreciation is affecting them. And I think the general consensus is not too much of a concern at the moment, because the increase in the export prices are much more greater than the rate of appreciation. So, but concerned that at some point in time in future, this issue will come up and affect those particular sectors. So this is an ongoing issue for us, and it's really a balancing item, that issue that we have to do on a daily basis to make sure that exchange rate is are not going too sharply, moving too sharply in a very short time. The next one is on to reflect some on terms of monetary aggregates. These are basically, the brown top line is the broad money, which is basically money supply we have in Papua New Guinea, and you can see very sharp increase over since 2006, and that's because of those large build-up in our foreign assets, and also to some extent credit that was given to the private sector by our banking system prior to 2010, where it starts to sort of slow down. And that's a green line in the middle. The reserve money is the second from the bottom. This is basically what we mean by whatever liquid reserve money in the liquid form. So it's another word for liquidity, and that's, you can see the trend is that it's continuously going up, and we go through some of those factors that are affecting that or causing that in a moment. Okay, coming down to now this is basically reflecting back and trying to give some foresight into how we see some of those macro indicators going. It's doing, looking very good at the macro level. As Paul said, we need to go down. The challenge for everybody, the government, and also to some extent ours, is to see how this trickle-down effect, the effect of these good macroeconomic outcomes, and also going forward is really affecting our little people in the rural areas. And we all know what conditions our people in the rural areas face over the last so many years, and they continue to face those conditions. And it is an ongoing challenge. In terms of our sector that we are responsible for, I will cover some of those things that we are trying to address those shortcomings, but it takes everybody. It's a concerted effort from everybody, including government, to address, to ensure that the benefits of the macro conditions in Papua New Guinea trickle down to the rest of the economy.
Time for a quick break. Stay tuned and we'll be right back. Welcome back. In the following presentation, Mr. Bakani highlights the growing level of liquidity.
Coming back to the issue of we have at the moment, it's been the issue at the main forefront for us, because, and this is to do with liquidity, the growing level of liquidity in the banking system, and in Papua New Guinea. And as I said, has been caused by a huge volume of foreign exchange build-up that we have in Papua New Guinea, largely also coming from the mineral taxes that the government gets. Now, when the government gets taxes, comes to us, to the central bank, we then pass the kina equivalent to government, to put them into government accounts, and then when the government spends that kina, that's when it generates. It's basically new money. It generates that liquidity into the system through its expenditures. And the higher the level of expenditures, that's when it generates into higher level of liquidity. So it's new money going into the system, and the central bank tries to manage that liquidity in the system. The another source of liquidity has been coming from high export earnings. We know the export prices have been high in the international markets, and that's generating that high export earnings for our exporters. Inflows related to the LNG project, as I said, again, and also other foreign direct investments. A lot of companies are bringing in, funding the activities here through foreign direct investments. That is why our credit generated by the local banking system has slowed down since 2010, because a lot of these companies are using their own funds to generate business here. Whilst the high level of liquidity do not appear to influence inflation via the credit channel, or which is through lending by commercial banks, this is what we've observed over the last, since 2009. Despite this high economic growth, it is still a threat to price stability and soundness of the financial system. The financial system is excellent, in a very top and strong position at the moment. Has been in a very, we withstood the financial crisis. It's still very strong, highly capitalized. It's not facing any major problems. So with our close supervision, with our close working with the banking system and the financial system, things are going okay for the economy system. But this illiquidity has the potential to destabilize the situation, and that is why we putting up front to ensure that everybody in the community and everybody involved in the finance sector, everybody involved in government is aware of those issues, so we can work together to address them. This is ongoing work we're looking at the moment. Prior to 2009, the linkage between liquidity and inflation was quite strong, and this is generated by commercial banks lending to private sector, and then private sector imports, and that's when you generate a lot of imported inflation. So it was through the channel, and obviously also partly responsible was the government high spending. So if the government spends a lot, people import, and that's when it generated during that time inflation, imported inflation. That's why we because of the openness of the economy, we import a lot of inflation through that channel. But after 2009, as I said, and you would have seen credit to the private sector sort of slowed down, and that linkage has weakened off. We've not seen, you would have, the inflation has not been generated, that's so generated by that liquidity according to what we see. So it's other factors that are coming in now, affecting inflation last year and 2010, but not through that channel of high level of liquidity via credit to the private sector by banks. So what are the upside risks to that liquidity? In the next slide, the upside risk we see are coming from the faster drawdowns of trust accounts from the central bank by the government, higher than budgeted overall expenditure by the government. And this is a challenging one, as we see in past election years. It can become a normal thing for government now to expand during election year. So this is another upside risk that we have for liquidity in Papua New Guinea. High transaction demand for money during the national elections. Obviously, the ATMs of BSP and all, the other banks will be pretty loaded frequently because of a large amount of money can see floated by the politicians or people campaigning for elections. So obviously this is something that we're ready for. It's not to say anything about shortage of money. We have sufficient volume of cash available, so it's an issue now to make sure that they're available out there in the very rural areas, and so that people can utilize them, people standing for elections can use them. And obviously the continued high inflows of foreign exchange that we will continue to get from our export earnings. Now, and of course those related to foreign direct investment in the LNG. Now, if some of these things are upside risk realized, they can potentially lead to instability in prices and then adversely affect business confidence. It has happened in the past where when prices, and through prices meaning exchange rate, interest rates, and inflation, if they start to be volatile, as I said from the beginning, stability in prices is very paramount for planning purposes, for business and government to plan ahead. Once you have a situation where price becomes unstable, then it causes a bit of confidence issue for planning purposes for everybody. Now, in terms of headline inflation for 2012, we project it to be around 8%. This is come down from last year's average was 8.4%, and the end of the year, December, was 6.9%. So you can see, and the high of last year was in March quarter of 9.6 last year. So that has trended down last year down to 6.9 at the end of the year. The high 8% inflation we're projecting has some upside risk to it, coming from higher domestic demand pressures and some inflation expectation being built into the inflation projections that we have. Any substantial increase in food and fuel prices, we've seen they eased off, but there is potential for them to come up again given the situations around the world in the global economy. And of course, higher than expected inflation in PNG's major trading partners. As I said, we are an open economy. We're subjected to imported inflation, what we import coming through our imports. So this can turn around. And of course, an impact of European debt crisis and oil export embargo on Iran.
And that was Mr. Bakani stressing on the liquidity and the price stability. Coming up after the break, Mr. Bakani discusses the monetary policy stance. Once again, we carry on with Mr. Loy Bakani's presentation, this time highlighting the monetary policy stance.
So this is reflected in the next chart, basically saying in terms of inflation, 8%, and then 2014 they diverged into coming down to 7%. In terms of we pass and move on. The stance of monetary policy, given this concern on the high level of liquidity and the potential impact it has on price stability or stable levels of prices, as in other words, the bank will maintain a tight stance, meaning that we will act with all the possible instruments we have to ensure that we're managing liquidity at some appropriate level, so that it does not have the potential to either be inflationary or to cause to destabilize prices in the market. That is why we as part of that, we're leaving the Kina facility rate, which is a monthly rate, policy rate that we use to signal the stance of monetary policy in Papua New Guinea. We kept it at 7.75% in December to now, and also we increased taken out some liquidity from the banks by increasing the cash reserve requirement from 6% to 7% in March. Given the strong domestic economic growth we're projecting in Papua New Guinea and the associated demand pressures in 2012, the bank will continue to assess the trade-off between high economic growth and inflation. Obviously, this economic growth we're going through will generate high inflation, no doubt about that. We have seen inflation move from a low of around 5% to now above 5%. It's a structural change in the economy, and we will have to live with it. Going back to the pre-2009-8 levels of 5-6% will require very big tasks big efforts in terms of moving liquidity or tightening up, very strong tightening to get inflation under control below 5%, the pre-2009 levels. But look, like anything, we have to live with the high inflation levels here. So it's a matter of us all managing within what we can do. So this balancing of to um, is to assess the trade-off between economic growth and inflation is not an easy task, and this is where the stance of monetary policy comes in. And again, this cannot be possible without close coordination also with the fiscal, and that's where the government comes in terms of budget management. So this is something we always call on the government to try and work together closely with us to manage the economic situation in Papua New Guinea. But we will adjust the stance to ensure that the high level of liquidity is managed appropriately so that inflation remains at an acceptable level. In the past, it becomes a norm where what acceptable level of inflation are you talking about? During those times, as I said, below 5 was seen to be an acceptable level of inflation. As I said, since the LNG came on board, construction came on board, anything, and I've said it in my past statements that not using the word acceptable level, but if it goes into double-digit levels, then we would react to it to try and bring it down back to a single digit. So the message is that it can be anything acceptable is below double-digit, but not below 5% that we've seen in the past. The chart just basically shows in terms of the movements in interest rates, the policy rate in the dark red, and then the market rates are pretty much below. So there is everything else is below because of the high liquidity. In terms of the investment rates in treasury bills and central bank bills, and also deposit rates. So there is some level of misalignment in terms of market rates and what the policy rate is. So that's something we're working towards to try and see what rate is more appropriate for signaling of our stance in monetary policy. Moving on, in terms of covering the third next part is on the macroeconomic management issues. Increased government expenditure. Firstly, increased government expenditure contributed to increased liquidity, as I said, in the banking system through deposits, and including those in the trust accounts. And that's been the recent phenomena in terms of trust accounts. That has increased the cost of managing that liquidity by the Bank of Papua New Guinea. So there is a call for responsible fiscal and monetary policies required to ensure macroeconomic stability, and there is a need for greater cooperation and coordination between fiscal and monetary policy. I just said that. We, in that effort to coordinate between Treasury and government and us in terms of managing liquidity, we've tried. There was an undertaking to move some of those trust accounts from commercial banks to Bank of Papua New Guinea, but obviously that's past now. We've forgotten about it now, but we're still trying to reach some compromise on having only those new ones. But it's not to say that money will eventually end up with the banking system once the government starts to spend it, but it's the magnitude of the drawdown. It's the phase of how they can use it. When it's with us, it's having less liquidity. Once you get it down to the banking system, that's when it creates a liquidity issue for all of us. So this is what the whole issue is about. On a positive note, the enactment of the Sovereign Wealth Fund Act in February this year is a great step forward in terms of managing revenues that will be coming from the LNG exports and also other mineral and oil. So we putting our heads together to work on establishing the fund now, but before we're saying that before the Sovereign Wealth Fund can be created, and this is continuously being called for, we're calling for government to allow the central bank or allow the mineral taxes to be deposited in offshore accounts so that we can manage it for government and then bring it as and when they need it. So that is one way of slowing down the injections of liquidity in the banking system. It's just almost like how you do trust accounts in Kenya here, but we want to keep it offshore before they can bring it in. The sovereign wealth fund again, and plus those accounts held in offshore can minimize the foreign exchange inflows and reduce the upward pressure on exchange rate. Especially for the sovereign wealth fund, it can mitigate the effect of any effect of Dutch disease in Papua New Guinea, and assist us in managing liquidity. Now, just a note on Dutch disease. I mentioned earlier the exchange rate appreciation, which can also be another form of, if it hurts the adversely affect the export sector, then that is another way of Dutch disease happening in Papua New Guinea. But the other way is through this foreign exchange, obviously, but the effect is through exchange rate anyway.
Mr. Bakani indeed mentions important macroeconomic management issues. We'll take a short break from here, and after the break, we'll hear more on other macroeconomic issues. Very important issues to cover in this last bit of the monetary policy statement presentation, where Mr. Bakani talks about the high cost of domestic prices.
On the other side, other macro issues, we continuously call on the government to not to compete with private sector and the LNG developers for limited production resources, as most of the private sector resources are tied up in the LNG construction. So governments to concentrate on maybe maintenance work only, but not any major construction until the LNG construction phase is over. Then they can utilize the vast resources that will be coming out from, or that will be released from the mineral resources, LNG, and it will be to their advantage, probably much more cheaper than if they go in now. There is some issue on the passing of the effect of the appreciation of the kina on prices in Papua New Guinea. We know prices are always sticky downwards, so obviously, and there is some, we know that there is some concerns about high cost of domestic cost here in Papua New Guinea, and that is why prices are not coming down too fast, or the effect of the appreciation of the kina on imported price is not passed on to the prices that our merchants are selling in Papua New Guinea. So it's something that responsible government agencies need to tighten up on, and in terms of monitoring price movements and ensuring competition prevails in the economy. The issue here is not, we're not raising it for the first time. We raised it last year. The IMF in their recent article for report also make mention of it, and so it's something that has to be seen and addressed on an ongoing basis. Finally, we in the financial system, the bank is very much in the forefront of financial inclusion in Papua New Guinea. As I said, how to address the passing down the benefits of the macroeconomic good fortunes that we're seeing now, how to pass it down through the people in Papua New Guinea. We are doing that through this program of financial inclusion. It entails firstly, reviewing our payment system at the moment. We have worked together with our stakeholders to put together a system that will reduce payments and settlements time, and more accurate and efficiency in payments in terms of cashment of checks, making payments, from what we have now to a much real time, same day. So that system is been implemented now in the bank together with our stakeholders, the banks and other partners. The other component of it is microfinance. We've continuously driving microfinance, looking at new micro banks. We have 3 at the moment. There's possible for a few more to be licensed. This is the tier that really affects our little people, SMEs, and those little sellers or those involved in informal activities. So that's one way of providing that service to them, making available financial services to them. And obviously in the financial education, we hope to do some, we are working together with the education department they're reviewing the school curriculum now so that we try to bring in some financial education or financial subjects in the school curriculum. We are closely working with the Department of Education in that, on that side. Obviously the biggest happening positive note for Papua New Guinea has been the liberalization of telecommunication in Papua New Guinea. And now we are enjoying the benefits of mobile phone banking in Papua New Guinea. And one step forward for us is because of the difficulties we face in reaching or providing that financial service to the rest of Papua New Guinea, especially in the rural areas, mobile phone makes it possible now. So we've been very much very strong advocate of moving mobile phone banking in Papua New Guinea, and we have very good startups by Digital, the MICAS by Microfinance, Nationwide Microbank, Post PNG with the mobile SMK, and BSP Rural, of course, coming up with this, and the others are coming up on board also. So it's a very positive. It's gonna bring everybody, those in the rural areas, reduce cost of moving to urban centers to access financial services, and we are very strong about it. So these are what we feel we can, it's a service we're providing, is available there to avoid all those difficult, to make it easy for the people in the rural areas. But this is one way we can contribute to passing the benefit of good fortunes in Papua New Guinea to the rest of Papua New Guinea. This is where I think I'll stop. Basically, the statement, if you read, provides forward-looking. It's more forward-looking now. Tries to give you some flavor of how we see things going forward and addressing those issues. Some ways of how we can address those issues. We will be doing the same in Mount Dagen this afternoon. The same presentation, and going to Leh next week, and possibly Kimbi towards the end of next week before Easter. Thank you very much, everybody, for your attention.
And that was our Resource PNG special on the BPNG Monetary Policy Statement presentation, where it helps us look forward to the financial year in 2012. For more on this, you can contact Resource PNG at mtv.com.pg. Thank you for joining us. Have a safe and blessed Easter long weekend, and we'll see you same time next Thursday. Good night and God bless.